The industry in this video has the potential to 10x your money in the next coming years, and of course you're not stupid. You can see it above my head right now. It is of course healthcare. I've chosen 5 stocks in which could go absolutely parabolic within the healthcare industry coming into the next few years, and I'm going to be ranking these for you as we go along in this video. Now I would like to say this is quite a deep analysis video. If you have TikTok brain and you can't seem to watch a video for more than 5 minutes, then this may not be the video for you. So please do stick around if you would like to see which stocks are actually a very strong buy within the world of healthcare. Of course, these stocks all look undervalued right now, but there is obviously going to be some in which I do prefer over others. So let's jump straight into it with UnitedHealth. So UnitedHealth recently has seen massive, falling off, essentially. There's no other way of putting it, and this is due to a lot of factors, one of the main of these being a criminal investigation.
Oh shit, not good.
Into Medicare practices, and this has essentially caused the decline of this stock. So UnitedHealth is nearly down 50% ever since this, and it's really just not been ideal for them. Obviously, they missed their earnings around this time as well, so it's really not looking good for this stock, and I'm going to break it to you now. This is at the bottom of the list for this video, but don't skip on right now. Let's get into a bit of an analysis for UnitedHealth in case you are wondering what's happened to this stock, and it does offer a very good opportunity for a very undervalued stock. I mean, currently it has a price to earnings of approximately 14 as of recording this, so when you take that relative to its peers in industry, it's definitely extremely cheap. But for me, this is a stock to completely avoid, unlike the ones in which we'll get onto in this video. They do pay a dividend yield of around 1.5%, and the recent performance of this stock, it has obviously seen a 50% decline since April, and it has been downgraded by HSBC to reduce with a price target of $270.
It is what it is. It is what it is.
So UnitedHealth is obviously down 50% since its earnings call here, where it was just awful, and of course the fact that the investigation has been opened into this company. It's not looking to be a company in which is good to invest into at the moment. There is definitely better options in the healthcare market, as we will get onto later on in this video. This is definitely the last pick for me currently. Obviously it's trading at a 14 PE currently, so it does definitely look cheap relative to its peers, and they do pay a dividend of 1.5%, but for me this is just a stock to completely avoid, especially when they have criminal investigations into their practices. So for me, completely avoid this stock, but I will go over a brief valuation for them just because they do still look to be massively undervalued now, of course. So looking here at UnitedHealth down at 54th here, we can see that I have put them in at a buy intrinsically. They are definitely a solid buy with their current growth rates, but I do have a bullish intrinsic value to be set at $942, which is obviously really far ahead of where we are, and my own formula puts us in at 1.2 thousand, which if you're new to this channel, these figures are actually relatively accurate, but this looks massively out of proportion right now. For me, even with these crazy valuations, I am actually still putting UnitedHealth in at a sell, but intrinsically they are definitely a buy.
What is he doing?
He's beginning to believe.
So if you are looking for a potential massive upside but a lot of risk, then this could be the stock for you. But for me, I mean, until I see this breakout with a lot of momentum, which it currently is nowhere near doing, it's something in which I will stay far away from, as this has the potential to just keep falling down and down with negative news coming out around of it. So now we're going to be looking at Eli Lilly. So this is a nice turn of events. This stock actually looks undervalued and has the potential to definitely break out in the coming weeks. There isn't much negative news around this stock at all. They currently are at a stock price of $723 and a market cap of approximately $700 billion. So they are a huge company, and they are trading currently at an approximation of 58 times earnings. They pay a dividend yield of 1%. So again, not really that much. For their financial outlook, 2025 guidance of 58 billion to 61 billion, indicating a 32% growth from 2024, and an earnings per share projected between $22 and $24. They do, of course, have these product highlights, which I'm not going to try and pronounce because I cannot read for the life of me. But they basically deal with type 2 diabetes, and this brings in $3.53 billion into their sales in Q4 of 2024, and this obesity treatment brings in 1.91 billion. But of course, you've got to think, especially with like Ozempic, these drugs are very controversial, so there is a potential for these stocks to come falling massively down if negative news comes out around these weight loss drugs, because they are very controversial, as I just said.
I'm here to tell you right now, we don't care. Let me tell you, we don't care.
With the analysts being very bullish on this stock just because of their product pipeline, they look to be as if they're going to be bringing a lot to the table in the coming years. There is a general consensus of a strong buy with an average 12-month price target of $988, with the current price obviously being in the $700 mark. So it does look to be a good buy according to the analysts. Nice. So Eli Lilly does look to be as if it is setting up a reverse head and shoulders right now, and it does have the potential to break out according to the patterns here. It has been trading sideways for quite some time now, for approximately just over a year. So it's about time this stock did break out, especially with their product pipeline, and they are consistently somewhat beating earnings with the what would that be? Q3 earnings there being a miss for 2024. So there does look to be as if there is going to be a lot of momentum within the stock. So I don't really understand why we are seeing this go sideways so much. And these levels right now could be the bottom. It could be a great place to buy in. But for me, before I really buy into a large position in this, I would like confirmation of this. I would like to see a bit more momentum as we look to see the stock move above their exponential moving averages, in which they're currently well below. So looking at a quick financial analysis for Eli Lilly, they have an incredible retention rate, but they really do lack in the department of liquidity ratios, as they are at a 0.10 or 0.1, which is not ideal, as you do want to see this at 1. And on a free cash flow, this is also just not ideal, as it isn't consistently positive and is very, very volatile. So that is definitely cause for concern with Eli Lilly compared to its peers. But of course, there is a lot of product pipeline and development going on for this company, so it's fair to say that it's a bit more justified. So for their intrinsic valuation, I have a bullish valuation set at nearly $1,000 at $959, which is similar to the analyst, and a bearish set at $510. If we scroll down to my actual own formula here, I yield a result of $1,400, which is absolutely massive, but this accounts for way more metrics.
He has landed several of those inside low kicks.
For me, this stock looks massively undervalued, and according to their discounted, this isn't actually right. This is completely wrong. Sorry, let me just change this. So now I've actually fixed it, because I was looking at UnitedHealth before. We can see that this looks to be massively overvalued. So for this year, according to their free cash flow growth, they should only be priced in at $16. So definitely a issue for them going forward. But overall, I still think it's fair to say that Eli Lilly is actually still a buy. Maybe not one of the best buys out of the lot, but it's definitely still a buy. For sure, the main benefits to Eli Lilly is their massive return on their investment in the previous few years. They do obviously have a really broad product pipeline on the way, and of course their retention rate is really high, but there is the drawbacks of their liquidity ratio and their free cash flow not being up to scratch when compared to the competitors in this video. So now we're going to be moving on to Novo Nordisk, potentially one of the best stocks in this video. So one of the key takeaways when I did my financial analysis for Novo Nordisk was their liquidity ratio, which could be better, coming in at 0.67, but their free cash flow is absolutely amazing. So that definitely makes up more for that. So I wouldn't really consider that a risk at all. They currently price in at nearly $70, and they have a market cap of approximately 160 billion, trading in at 19 times earnings currently, and paying a dividend yield of 1.65. So recent stock performance for this company, well, similar to Eli Lilly, it's just gone sideways consistently, but it has experienced a significant drop due to leadership changes and increased competition. The share price has halved over the past year, which we have obviously seen in this stock. So looking at their intrinsic valuation, I have recently upgraded this stock massively. So my first analysis for this company was way back on the 31st of January this year, and I priced them in on the bullish side to be at $70, and now this has moved all the way up to $140. Bearing in mind, back then the stock was worth $84, and it's now worth $68 to $69. So it does look to be as if it's set up in a really nice position on a intrinsic valuation here. I'm typing intrinsic valuation here. What am I doing? So what is this stock called? It's called Novo Nordisk. So on a day chart, of course, we've seen this fall down massively. And again, this is not really something in which I would like to buy at these levels, as it is just continuing to drop. Despite it being massively undervalued, this does still have the potential to drop much, much further.
Oh, shit. Here we go again.
If you're looking long term, then for sure get in at these levels, because they are very good levels for this stock. But if you're looking to just get in and out within maybe a few months to a year, then I would probably wait for this to turn. We are seeing there is a potential for this stock to have a bit of momentum at the moment, with it just breaking through its moving averages, but it's actually in a long position on the MACD indicator, which indicates there could be momentum to come for this share in the coming weeks, which if it does break this level here of resistance, this is definitely an amazing stock to be buying. Novo Nordisk has seen a significant drop due to leadership changes, of course, in the past year, so there's going to be a lot of volatility going forward, and with it having legal implications around the GLP-1 medicine, it's going to definitely have a lot of effect going forward for this stock. As I said earlier on in this video, Ozempic drugs, weight loss drugs, they are very controversial, so this stock, it definitely still has the potential to fall down massively. There is an average price target of $135 on this stock, representing a potential near 100 upside from this current price. So definitely a massive opportunity on the horizon for this company, but we will see where that does lead. So now looking at OSCR Health, this has also been moving massively sideways, if not slightly down over the past year. And it does look to be as if it has broken out recently, but fallen straight back down. It couldn't break this level of resistance here. And it's just something in which does look to be as if it's going to struggle. So they have a current market price of $14 with a market cap of 3.6 billion, which is obviously way smaller than some of the companies in this video to compare. And the PE ratio is at 35. There isn't a dividend yield, and the stock performance is a approximate decline of 27% over the last year, with a 52-week range of $11 to $23. So it's definitely on the lower end of its 52-week range at the moment, suggesting it could be a good time to buy. But again, if you know my rules, then you know that I don't like to buy stocks when they aren't breaking out, essentially, and this stock does look to be as if it isn't breaking out. So it could definitely be an opportunity going forward, and according to my intrinsic valuation here, we can see that they are actually somewhat undervalued, not as undervalued as some of the companies in this video, but still undervalued to an extent. So on the bullish side, I have an intrinsic value for this company to be set at $22, and on the bearish side, it's set at 11.7, which is obviously below where the current market price is. But on my own formula, I have this to be set at $21, which is on the high end of their 52-week range, indicating that this stock is definitely a buy. If you're looking for long term, I think most of these stocks are definitely a buy, with the exception of potentially UnitedHealth, just because of the uncertainty around it at the moment. But it does look to be as if it is something in which can massively perform. And with their free cash flow in mind, when you do a discounted free cash flow analysis, this stock still looks massively, massively undervalued, especially when you take into account their discounted free cash flow.
I'm gonna come. Oh.
So definitely a solid buy, but again, I really do want to wait to see if there is a momentous breakout for this stock. Right now, it just doesn't look to be as if it's set up in a positive position at all. It's definitely got the momentum going against it currently, and when comparing it to other stocks in this list, it doesn't look to be one of the best options at all. But there is a massive potential for this stock to break out, and when it does, I think that's when I will be opening up a position in this company. So we will see when that does actually happen. Of course, this company is a bit different to a lot of the companies within this, as it doesn't actually primarily make its drugs. It is a technology-driven health insurance company aiming to make healthcare more accessible and affordable. So it is slightly ethical as well compared to Ozempic or weight loss drugs. This does look to be a more ethical offering. Speaking of offerings, it does offer individual and family plans, Medicare Advantages, and small group products. With its analyst sentiment, it has a forward PE of 19.88, suggesting expectations expectations of strong earnings growths, and analysts are cautiously optimistic considering the company's innovative approach to health insurance. So it does definitely look to be as if it could prove to be a great long-term investment. So Hims & Hers, probably the stock in which a lot of you have skipped to. I see you. This stock is currently priced in at $51 as of recording this, but I know this is changing constantly at the moment. It has a market cap of $6.56 billion and it's at a PE of nearly 40, which is actually not very accurate from memory. Last time I checked, it was actually all the way up at around 80. Yeah, it's at 78, so that was wrong. But looking here on Hims & Hers, it has broken out massively over the last couple of weeks, with it having really, really strong earnings guidance, beating it by 65% on their earnings. So it just looks to be as if this company is doing absolutely incredible. And when you do look at their financials, this company is doing absolutely incredible. So, of course, there is a lot of momentum behind this, with it being in a long position on the MACD, and, of course, it's above all of its moving averages to a massive extent, apart from, of course, the 20-day, because that's way more accurate than the rest. So there is a lot of momentum pushing this up at the moment, and it does still look to be undervalued. So there could be massive movement still yet to come within this stock. If I do actually open my Hims analysis, which I'm going to have to search for because it's been a while, then we will see that this stock is massively undervalued. So this analysis was done approximately a week or two ago, but it is, of course, still very, very accurate. So we can see, actually, we'll look at the probability theory. This stock has a probability theory of a positive day to be set at 54% and a negative day to be just below 40%. So it is in your favor with this stock.
Sometimes it may be good, sometimes it may be shit.
So intrinsically, on the bearish side, this stock is priced in at $72. This has actually declined since I last saw it, indicating that earnings per share isn't as strong as it was when I last analyzed this stock, which is it's not necessarily a bad thing, as it indicates the price is going up. So on the bullish side, this is set at $72, and on the bearish side, this is set at $37. And according to my own analysis here, I've priced this stock in at $74-ish, and so you can see that this stock still looks to be a massive buy. With a margin of safety of 25%, that gives you an acceptable buy price of $55, but I would actually say an acceptable buy price for Hims & Hers, just because of their volatility, is actually $45. According to their discounted free cash flow analysis, in the next 9 years, this stock should be worth nearly $270, indicating a lot of strong growth yet to come for Hims & Hers. So Hims & Hers, again, is a bit unfamiliar when you actually compare it to the other companies, as they aren't actually an over-the-counter company. They are primarily an online service. Of course, OSCR is it's a insurance. Novo is an actual prescription drug, and you go on the list. They're all slightly different from each other. But Hims & Hers does really offer something different, as they are now expanding globally and with a lot of momentum. Of course, I'm actually seeing adverts now in the UK for Hims & Hers hair loss pill, so I don't know what that says about me. I don't know if it's finally time to bite the bullet and actually order some. But it does look to be as if this company is going to do incredibly well moving forward. So for me, this is one of the best companies in this video, just because of the pure momentum. Again, that isn't right. Let's just change this to, let's just put 80 for the sake of it. So let's just do a quick comparative analysis of all of these stocks. So looking here, I mean, I'm not going to go through it. I'm going to be perfectly honest with you. If you want to pause and read, then please feel free to. I'm not going to read it. I really can't be bothered. So when comparing the core businesses, not the actual stock, this is what I actually rank them as. I put Novo first, followed by Eli Lilly, followed by UnitedHealth, followed by Hims, followed by OSCR, and last. So Novo looks to be the strongest, with a lot of free cash flow under them, and they have a healthier valuation in comparison to Eli Lilly. Eli Lilly obviously offer a top tier growth and momentum leader potentially going forward, similar to Novo, and they do have an incredible pipeline, which is something which will carry them forward. UnitedHealth looks massively undervalued right now. Their free cash flow is amazing, and they are obviously a long-term holder within the healthcare industry. So it's definitely a good company, but for me, it's a stay away for now, for sure. Hims & Hers, high upside potential if the weight loss performance drugs stabilize, of course. Great momentum, but still very speculative. But their financials are, again, incredible, but they are the new kid on the block to an extent. And OSCR is interesting as it is tech-driven, but it does carry a lot more risk in comparison to the other stocks, with there being a bit more uncertainty. But that doesn't mean to say that it's not a good company with me putting it in last. This is some very, very strong competition in which it's facing.
I'm here to tell you right now, we don't care. Let me tell you, we don't care.
But when I do actually analyze the stocks, I do put Novo in first, with them having a lot of potential to break out soon. Obviously, I put check intrinsic valuation there, but we've already done that in this video. There's a lot of potential in Novo Nordisk, but of course, these are all very risky stocks, right? Because there's a lot of volatility within healthcare, especially with negative press coming out around these stocks. Secondly, here I've put Hims and Hers because it has a huge, strong breakout and it looks to still be undervalued. It has a lot of opportunity to be momentum traded, and of course, my acceptable buy price is actually at $45 for this stock. Then we have Eli Lilly, which, like Novo Nordisk, is massively undervalued and has the potential to break out soon. Maybe not as soon as Novo Nordisk, but long term, this is still an amazing play. OSCR, this stock moves sideways consistently. However, it does look to be undervalued, looks to be struggling to reach its resistance at the moment. And UnitedHealth is definitely in last. Never buy a falling knife, because you don't know when it's actually going to stop falling until it cuts someone's fingers off. So that is my analysis for these 5 companies. I hope this has made some sense towards what you're trying to get at this video. I don't make a single penny off of these videos, so it would be really appreciated if you could leave a like and subscribe. I'm trying to build a mini army of stock analysis enthusiasts, so if you could subscribe, it would be greatly appreciated. I really do appreciate that you have made it this far into this video, because a lot of people don't make it this far. So give yourself a pat on the back, because a lot of people end up clicking off of these videos quite early on because they have TikTok brain. So thanks for watching. With that being said, I will see you for the next video.